Here is an income trade illustrated for educational purposes only. Options are risky and is not for everyone. So here we go. This is a test. This is a trade that is being done right now in our account, and it has a profit of $439. It's double calendar. Calendar is at 660 and 610 strikes, and one of them is here. If and the stock is now Google. It could be any commodity, it could be any index, anything that you could, but basically this is the concept of an income trade, and we're trading at 640 here, and is making us a profit about almost a $419 right now. The break evens on it are here 692 on the top. If this stock moves up here to 692, we'll still be profitable at the time of expiration, which is about 25 days. If it drops severely and goes down to 583, we're still profitable here. So the break evens are between 106 points. It does not matter which way the stock goes, up or down or crashes. It only matters where these break evens are. And if anybody, a strategist, thinks that the stock is going to stay there between these 2 points, then we are going to make profit. If you think the stock is not going to stay between these 2 points, this trade is not for you, and you should not even attempt it. But most probabilities on these trades are very high, because we are sitting here at 640, and this dotted line here is one standard deviation away and one standard deviation on the downside. So containing these between the two standard deviation, the probability of profit is very high, and about 70%. If this price is contained here, can this stock over the holidays move up that high or crash that high? Even if the market crashes, it doesn't matter what economy we're in, it doesn't matter what the prognosis on the stock is. All it matters, it stays between these 2 points, and the profits will result. As a result, we have a time positive theta decay of 121. It's a delta neutral trade. It is not directional. It's not a day trading strategy, and it is not something that needs to be monitored every 5 minutes. You had to come in here, take a look at it, and get back to it later on during the day. And let's just fast forward and show you the profit potential on it. I'm going to fast forward to January the 5th, and here we are looking at it here. This white line has now moved up here, as you can see, and there is a projected profit of 1508 sitting in here. Even if it moves up to here, we have $1160. Okay, that's 660. That's 20 points up. And if it drops here another 30 points, we still are profitable at 974. So these probabilities makes it a high amount of trading that is delta neutral, high probability trading, and it is a very sound and risk-free trade. Risk-free in the sense you have put 4.85 to buy a debit and a 5.4. That's the maximum loss. If the world ends today and if everything crashes, that's the maximum that you can lose. So that's what it is. It's not a day trading vehicle. It's not anything that could be done on speculation. This is a very calculated, positive, theta positive, income generated trade.